Now, joining us live from our New York studios to talk more about Groupon and the IPO climate is Wedge Partners senior analyst Blair. Brian, always great to have you here on the show. So what do you think? Is Groupon worth $12 billion?
Well, you know, what we know is that it's not worth 25 anymore. I jokingly say that this is actually a Groupon on the Groupon IPO. You get it at half price. You know what? I think it's going to be tough for them to make a case for this 10 or 12 billion valuation. What we're seeing here is a lot of new entrants into this space. Amazon has jumped in with Amazon Local. Google, who tried to buy them famously last year for about $6 billion, has their own Google offers. This is an area that I think is possibly a fad, but what we know is that the barriers to entry are low, and other guys can jump in and leverage their user base, and I think that's what some players are trying to do.
This is a company that has been pummeled with criticism, but why the rush? Is Groupon trying to complete this sale before it has to report Q3 numbers because Q3 numbers may not be so great? You know what? That's certainly possible. It does feel like there's a little bit of desperation here. I think they simply need the capital. They've said they're not going to use the capital, to run their business anytime this year, but I think that they clearly need it. I read that they lost $100 million last quarter. I think they only have a couple $100 million in the bank now. So I think that this is actually a need for cash. As Cory pointed out, their marketing expenses have been growing, and if they want to continue to grow revenues, it looks like they're going to have to continue to spend marketing dollars for that, and that may be where the big chunk of this IPO offering goes.
Brian, if you look at the income statement, you see those marketing costs, you see the losses. But if you look at the balance sheet, you see this amazing number in the accounts payable. And without getting lost in the accounting, that's the customers, the Groupon merchants who haven't been paid yet, even though Groupon's already taken in the money from customers.
That's right.
Is that the most worrisome thing about this entire business model?
It's definitely one of the worrisome things, and that's not always a problem. I know that Walmart works the same exact way. So there's a deficit there where they get the money from customers first before they actually pay the vendors. I think it's one of the concerns. For me, the bigger concern is what you brought up earlier. They are spending a ton of money to try and keep and build a customer base, and that's not a sustainable model over time if your customer acquisition costs are increasing.
Now, Eric Lefkowski, the founder of Groupon, the executive chairman, that is a chairman who's very involved as an executive of the company, has had two companies have gone public, which are still public, albeit not with any free cash flow. But he's also had companies that have gone bankrupt. There have been shareholder lawsuits. Right. Does that matter here? It
absolutely matters, Cory. And you know, there was a company that I forget the name of it, but he did sell it, and it went bankrupt about a year after it was sold. And I think his history.
Well, just as a correction there. So it was called Starbelly.com, and it was sold to a company called Halo. Halo wrote the acquisition to zero, and then Halo went bankrupt.
That's right. That's right.
And
that actually is important. I mean, that's the type of thing that investors are going to be looking at when they're on this roadshow next week. They're clearly going to want to look closely at the business, but they're going to want to look at the founders, and they're going to want to look at the history of what the founders have done with other businesses. And as you pointed out earlier, they're also going to want to look at the use of proceeds from the pre-IPO raise they did. And I think that's something that's going to fall. It's going to fall under very tight scrutiny. Is exactly what did Groupon spend that money on? As my understanding, they spent it to pay investors and to pay employees. And that's the kind of thing that's going to be of concern, I think, on the roadshow next week.
So, Brian, my question is, how did it get to this point? You have some of the most high-profile venture capitalists invested in this company. Did all of them miss early warning signs?
I think there clearly were some warning signs ignored initially, but the fact that this deal has been pushed out, and this was filed in June, the fact that it's been pushed out and delayed, it was kind of group on, then group off, now it's group on again, I think shows that maybe some of these red flags were paid attention to, and it's caused a delay. The SEC came in and looked very closely at some of their accounting methods that seem to be ignoring some of their marketing costs, and so I think they have addressed some of that, but that's why they're going out next week, I think, because they feel like they have dealt with some of these red flags, and we're going to find out.
Yeah, Brian, really quickly about the SEC. What does this say about the SEC and their willingness to go up against big investment banks and some of the big venture capital investors behind this thing?
Look, I think it's great. They clearly recognized a couple of red flags there on a very high-profile IPO, and they jumped right on it. And I think they brought some of these concerns to light. Them jumping on it did brought some of these marketing issues to light. I forget the term, Cory, but they actually created an accounting term. I forget exactly what it was, but Groupon came up with an accounting term that kind of masked some of these costs. And I think the SEC saw that, and now everything's out in the open. So I think they've done a good job in pointing out some of the issues with this.
If it can't raise $12 billion, what's more realistic, Brian? What do you think this company could debut at?
Well, like I said earlier, it's already a half-price Groupon from the original market cap. You know what? I think there's always a bit of ego involved in these things, Emily. So $6 billion rather, was the price that Google was going to pay. So I'm going to have to guess it's going to be somewhere between 6 and 10. 10 to 12 is what's been kind of bandied about the last, the day or so about where it's going to be. I've heard some people suggest as low as 3, but my guess is it's probably going to be closer to 10, but definitely over 6.
All right, more with Brian Blair from Wedge Partners after the break here on Bloomberg West.